Hi guys and gals, this is Blake Morrow. You are listening to the Morning Edge webinar. And by the way, the euro just slipped into new lows. I don't. EU just said to MOL alternative to common deposit insurance via Reuters. EU just said MOL. EU said to MOL alternative to common deposit insurance. Common deposit insurance. What does that mean? What the hell does that mean? I'm just reading the headline here. Whatever that did, it just pushed down the euro a little bit, which I'm short a little bit of euro dollar. I've been short since Wednesday night. Yeah, and I'm short here at 70. I'm just sitting at. I've been short the last couple of days, 75 actually, but yeah, it hasn't really gone anywhere. Can you? It's just unbelievable to me, and to maybe to you guys too, the tight ranges that we've had this week. I mean, unbelievable. I mean, not so much in the not so much in like some of these other pairs, but I've been short really since like right here, I guess. It's a 4-hour chart, so let's see. I've been short since like right here. We haven't done squat. No, I take that back. I've been short since like right here. Maybe here. I've been short since like right here. It hasn't really gone anywhere. I mean, literally kind of just been bouncing around. And it's just so, I mean, just the tightness of the ranges have been crazy. Let's see, 24 hours. We're here. No, I think I've been short since, yeah, I guess I've been short since here. I've been short pretty much all week. It's just real small. I mean, it hasn't been, obviously it's not anything that's been rattling my cage. I, haven't really been doing anything with it, but it's just amazingly, amazing how tight the ranges have been. Anyway, okay, go. Yeah, Amanda says, yeah, the Kiwi's driving me nuts with this tight range. I know the Kiwi, I mean, the Aussie, I mean, it's just all crap right now. Now, before we go into our morning analysis, and let me go ahead and grab our bias chart. If you guys are just tuning in, I want to go ahead and just explain a couple of things for you. I'm out of half of my dollar Canadian. I also sold my Euro Canadian and my Aussie Canadian. I took some really nice profits in both of those from yesterday. I got long Euro Canadian and Aussie Canadian yesterday. I bought some more dollar Canadian down at like 129.50. I spun out of half of my dollar Canadian this morning at 130.44, about 2 hours ago. And I am in a half size dollar Canadian, small size short pound that I've been short right basically here all week, and not all week, like several days. And same with the euro. I mean, I've been short both of them basically at these prices. And I have those. I am still long the euro New Zealand, and I'm still long the Aussie New Zealand. And but the thing is, yesterday I was really, it was like one of those, to me it was a really bad day. I was telling, guys in the chat room, I had a big drawdown. I mean, for me it was like about a 3% drawdown yesterday, and that's a big drawdown for me. And that's why I was, if you recall yesterday, I was just not in the mood of doing the webinar. Even though I did it, just wasn't really in a great mood because it was like one of my bigger drawdowns that I've had in a while. Now it's bounced back and I'm back to break even basically for the week. So just so you all know, I have bad days just like anybody else out there. I've come back, which is great. I feel like a winner for coming back, for clawing all the way back, which has been phenomenal. But yeah, I just wanted to explain to you guys that that was pretty big. Now, it was a big deal for me. Now, on the other thing is this dollar Canadian. I am still long a half size position, and I am looking to reload the dollar Canadian. And we were just talking about it with Paul. If you weren't listening in, on a dip back below 130 next week, I'll probably get long more. And the reason why is because I do think that crude oil has peaked. And and I did get out of my dollar Norwegian krona, and I got out of my dollar Swedish krona for small losses, just so you guys know. I just took them off my board just to have them off, so I'm not holding them through all this data today. But if you look at crude, we were looking at the top of this channel. We hit it. We might be in an ascending wedge. We're at the bottom end of the wedge right now, which is interesting because of where we stopped. But if you look at crude, and we talked about this yesterday, it did peak. Thank God, it peaked at the 127% extension at 150.20, and it reversed. So I'm happy with everything, how it's all happened. I'll be much happier if crude oil drops towards the mid 40s. That'd be great. It would definitely make my day. It's not going to happen today, but I feel good about that. I do think that crude has peaked. That's why I still hold Canadian shorts, and that's why I'm going to continue to hold Canadian currency shorts. Like I said, I do think crude has peaked near term. I don't know if we are done going higher. I don't know if if we're going to continue on to $51, $52. I don't know that, but I feel that we have peak near term, and we're going to come back down towards probably the $48 to $44 in the near term. So with that being said, I just kind of wanted to update you guys on what my thought process was and where I'm at now. As far as today goes, we do have advanced GDP, or preliminary GDP, excuse me, which is second estimate GDP. All right, advanced GDP would be a little bit better, more of a shock to the system, but the preliminary GDP, or second reading GDP, is, it may move the market. But Janet Yellen speaking today at Harvard. She's also speaking, and Ben Bernanke speaking too. Our old Fed governor. They're speaking at Harvard at Radcliffe Day, and I don't know if she's going to talk about monetary policy. She may not, but she has been prancing around her Fed governors, for the last couple of weeks, and really trying to get the market to understand that June is a live meeting. Now, whether Janet Yellen follows through, gosh dang it, sorry, I don't know why my data stopped. It's been happening. It happened like once earlier today, so just give me a second. It just stopped for Lightwave. I'm not too sure why. It's weird. Anyway, the thing about Janet Yellen is I'm not sure if she's going to talk about monetary policy. She's been, like I said, preparing the market for an interest rate, the potential of an interest rate hike in June, and that has been apparent with all the different Fed governors that we've seen. Shoot. Excuse me one second. I don't know what the hell is the problem here, so bear with me. Sorry guys, I gotta deal with this. But anyway, what I think is going to be really important today is how the dollar responds, especially if you're looking at the U.S. dollar Japanese yen that has a nice little triangle formed, which we'll talk about that obviously here in a second. What I want to do is I want to obviously prepare you guys for today, as we do every day here. And if you guys are new, I'm sorry about this Lightwave thing. I'm just trying to get it running properly. All right, here we go. All right, okay, we're good to go. All right, so now let's start off with the euro, and the euro is trading near its lows. Now that's not saying a whole lot because we again, just another night of tight ranges. I mean, the euro dollar's had a 31 pip trading range. How crappy is that? I mean, really crappy. So, but here's the euro, and you can see I think we've clearly identified right now where the support and resistance is for the euro, which is good. Obviously 112.15. Paul was trying to figure out where did he get that 112.15 number from. Well, he probably got it from the previous support here. So, 112.15 is resistance. Whoops. Okay, there we go. All right, so 112.15. Gosh, it's Friday. Thank God it's Friday. TGIF, huh? We are still in a bearish bias. Support comes in at 111.25. Okay, and if you don't know why 111.25, it's a 618 retracement, as we've been discussing, from this spike low over here. That was either FOMC or Bank of England, I forget what it is, to the high 111.25 is a 618. We also have 127% extension of this move that comes in at 111. So I think that even if we hit new lows today, so I'm going to draw it on out for you, because I'm short a little euro. If we hit new lows, I would expect us just to bounce. So I'm going to cover my euro dollar shorts if we get down there. Okay, if we get down there today, just letting you know. All right, it's not a big position. I'm not going to. If I get stopped out or I make a little bit of money, it's not going to change my life a whole lot. It's just it's like I said, it's relatively small positions here. But let's talk about the cable. Cable's also, I have a small short on the pound. The thing about the pound yesterday, I don't know if you guys noticed this, we had a nice false breakout. Here, let's get rid of this. Let's get rid of that. Okay, and let's get rid of this. We don't need that for now. We had a nice false breakout. This was a 127% extension. I tweeted that chart right when we were there at 147.20. If you guys don't recall, that was a 88% retracement of this move as well. It literally missed my stop by, I'm not exaggerating, like 1.5 pips. Like, I mean, talk about a little lucky. I felt really lucky that I didn't get stopped out there. Maybe I'll be happy. Maybe I might, after we're done today, wish I did get stopped out. But anyway, as far as the cable goes right now, this 146 level I think is going to be pretty big. Now the reason why I say that is, actually what we should do is do this. Okay. This triangle, as we come back down and retest the 146 level, is going to be big. Even if we push through 146 today, like let's just assume, whether the data is good or Janet Yellen says something that gets the market all hot and heavy, even if we push below 146, I think the downside is very limited right now. Same with the euro. If the euro pushes to new lows, which by the way, the euro's at new lows, Swissie's at new highs. If we push to new lows, it's going to be marginal. Excuse me. So, I'm gonna say at 146 is big support, but really 145. I'm gonna write down 145.85 as I think even bigger. Okay, so 1.4585, big support. Okay, resistance right now is 147.40. Okay. That's key resistance. Now the cable is obviously being moved by, we're in a range environment here. The pound is being moved a lot by obviously the polls. I have expressed my concerns to you guys this week that I think the polls are a little skewed in one direction, the no vote direction. I believe that that those polls are going to, as we get closer to the referendum, I think the polls are going to become very even, and it's going to make the market a little nervous as we are. I think they're going to become a little closer. So With that being said, I think the pound might be a little lofty here while we're in our range. I think over the next couple of weeks we might make our way back down towards, the 144, 143 level as we consolidate ahead of the referendum. So that's why I don't mind being on the short side up here. I don't think we're going very far in this range. I think we're going to be bouncing around like this a lot over the course of the next couple of weeks. I think we're going to be bouncing around like that. So, like I said, I don't mind being short up here near term. Okay. Now, let's go over to the Swissy. So here's the Swissy. Swissy, despite that dollar weakness, here, let's remove that. We didn't get, stupid dollar Swiss did not fall, and which, because I'm not long, you know me right now. I'm extremely irritated that I don't own the dollar Swiss. Now that doesn't mean I just need to run out and buy it just because I think something's going higher over time, namely the dollar Swiss. Doesn't mean that I'm just going to run out and close my eyes and buy it and just get long. That would be stupid. But I'm very frustrated at the fact that it's not pulling back for me to reload. That to me is very frustrating. Yesterday we made a false break below this 98.75 level and popped right back up. So 98.75 is big. 99.40 is big resistance. And I'm telling you, if you are short, now just put your and I don't have any position here. Okay, I don't have any position at all. But I want you to put yourself in the shoes of somebody who's short. If you've been shorting the dollar Swiss, how do you feel about that right now? Think about that. If you're short the dollar Swiss, how do you feel? You're shorting this thing saying, man, this stupid dollar, it's going to go down. You're probably starting to get a little panic stricken at the fact that you're short. Because the way I see it, that's a pretty solid flag. And that, on a very minimal retracement, if we break out, it's going to be viciously strong because it's poised without any type of pullback, very marginal pullback. If we rally, it's going to rip. All right, so and I'm not long. I wish I was long. I'd rather be long down here. I don't know if I can chase it higher, but I'm just saying, 99.40, 98.75. So let's write that down. Was it? Okay. Canadian. Thank God the Canadian came back. Oh, the yen. I'm sorry. I'll come back to the Canadian. Here's the yen. So the yen, we are consolidating just below this major channel resistance. Let's get rid of this really quick. Pullback has been minor, like a 24% pullback. I keep expecting a breakdown in the dollar yen. It's not happening. But then again, we're not breaking down in equities either. So, yeah. It's hard to say, what's going to happen with this dollar yen. But I'll tell you that we have a really tight triangle that's developing, which makes me believe that a move above 110.20 or a move below 109.40 is going to produce some sort of movement. So what I'm saying here is this. Let me draw it out for you. Either or. Either or. Okay. 110.20, 109.40. New low zero. What? Where am I at? Okay, there we go. One. Whoops. Man, I tell you, 110.20. I am tired today. Just to let you guys know, I am tired. We're still in a range in the dollar yen, but I'll tell you, man, we break out. Whoops. We break out to the upside. This thing's going to turn bullish. Longer term, just so you guys all know, I mean, we've had this drawn on our charts ever since we were here. So just, we had a head and shoulder pattern. We broke down. I thought we went far enough when we got to the 38% retracement. We bounced, and then we made one last flush to the breakout point, which was 105.50. I didn't think that was going to happen. So we made one last flush out, and now we've been bouncing. And I'll tell you, we come out of this channel. The reason why this is such a big deal, guys, if we come out of this channel, and I know I've said this, for those of you that are newer listeners of the Morning Edge, you may not have heard this come out of my mouth, but everybody else that listens here normally knows that the dollar yen is a pusher. It's a pusher of dollar strength and weakness. As the dollar yen broke lower here and here and here, it really perpetuated dollar weakness across the board. What do you think happens if it breaks out to the upside? Yeah, it's going to perpetuate dollar strength. So if you're short the dollar and the dollar yen starts breaking above this 110.20, 110.50 level, you are going to want to reconsider that, in my opinion. Okay, so just keep your eye on the dollar yen. It could really spur some dollar movements here. Okay. And the flip side is if it breaks down. I mean, if it breaks down and you're like me, you're long the dollar, you better think twice about that. Because I've seen the dollar yen perpetuate dollar weakness too. All right, let's go to the dollar Canadian. Now, like I said, I'm very thankful about the dollar Canadian. A nice bullish engulfing pattern, candle, follow through back to the upside. We had a 50% retracement. I have exited half of my dollar Canadian longs, which I feel much better about being in the position than I was in yesterday. So 50% retracement, which also suggests that 130.50 is huge. And I know we're there right now. So 130.50, but let's say we break that. 130.80 is our next up resistance. Now listen, I am long the dollar Canadian. You guys all understand I'm long the dollar Canadian, but I'm going to tell you right now, if you guys are like, oh, Blake, you're full of, crap, and, the dollar's not going up, and, dollar's going to hell in a handbasket, and, I hate the dollar. Hey, listen, I'm an American. I'm an American trader. I'm not ignorant to the fact that there are a lot of people that don't like trading the dollar just because they don't like the dollar because they just don't like the dollar. So I hate the dollar. I only will short the dollar. I understand it. I get it. If that's your opinion, which opinions are like buttholes. Everybody's got one. Or is it belly buttons? Yeah, whatever. We all got those too. If your opinion is I just want to short the dollar, I would think that a better place to be the short on the short side of the dollar would be right here. Okay. Now, personally, I'm long the dollar Canadian. Personally, I think the dollar Canadian is going to 135. Personally, I think this inverted head and shoulder pattern is still in play, and I think we're going up here. But that's my butthole, not your butthole. Okay, so again, we all have buttholes. I didn't know this whole webinar was to talk about buttholes, but apparently that's going to be the topic of conversation today. Okay, now as far as what I want to do with my dollar Canadian, since I've already exited half and I feel a whole hell of a lot better about being in my position now, is I would love to see a dip back below 130 to be on the long side, personally. Okay, now where this price is that I'm looking to buy, I'm not really too sure. I am in the firm belief, and I'll say this again, that I think that that crude oil has peaked near term. I think crude is heading back towards 46, 45, somewhere like that. And as it comes down, it's going to help the dollar Canadian go higher. That's my opinion. Now, I'm hoping that over the course of the next 48 hours of trade, meaning early next week, that we pull back a little bit. If we do, I'm going to try to load back up on the dollar Canadian. So any move back down to 129.60, I think that would be a good level of support to be playing long off of. 29.60. Okay. All right, guys. When I come back, we're going to do the Kiwi, the Aussie, the dollar index, the Mexican peso, the Swedish krona, the Norwegian krona, which, by the way, I did exit both of those for small losses today, just so you know. I'll be back in a few moments. Don't go anywhere. Thanks, everybody, for being here. Happy Friday, TGIF. La 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 la. La 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 la. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. Let's try not to sing the Smurf song again. You all know why I do that, right? You all know. I do it because this weekend, when you're having your cup of tea, your morning coffee, you're folding your laundry, you're walking your dog, you're at the market, strolling around, and that stupid Smurf song pops in your head, you're going to turn around and you're going to say, God damn it, that Blake Morrow. I hate him. I hate him. And then, at that moment in time, you'll realize that I have won. I win. Jack says, you freaking stupid Smurf song. That's right. It's the stupid Smurf song. All right. Where are we at? We got to do the, let's go into the Kiwi. Norwegian krona new highs. Damn it, I sold that thing already. What a wussy wanker. I'm a wussy wanker. All right, here's the Kiwi. I'm out of my Kiwi too. This, talking about a frustrating market. Oh my God. This is a frustrating market. Amanda was saying, oh my God, the tight ranges in the Swissy, or in the Kiwi, the thing is just ridiculous. So, and ironically, I've actually done pretty good trading the Kiwi this week, which has been kind of like all my making up a little bit. I've been shorting the Kiwi on rallies, and then I would cover it for like 10 pips. It would spike up, and I'll just short it and cover it for like 10 pips. Nothing to write home about, but it's been adding up. Fortunately, it's kind of been one of my saving graces, if you will, the last couple of days. But the range is getting really tight, and you guys know that we're in a bearish trend as we've come out of this, this daily trend line here. 67 cents still remains really big support. Okay, I'm very much aware that we might have this little down channel happening. We may have a descending wedge. So you want to be really careful if we come back down and hit 67 cents again. That might not be a bad place to be on the long side. That's not how I'm looking to trade the Kiwi, because I think it'll actually break lower. But you never know. 67 cents is key, okay? Oh, sorry guys, I had my screen paused. Okay, here, let me sorry about that. Okay, so again, here's the chart. What I was saying is I just been selling it just on these little spikes here. Selling it, take 10 pips, selling it, taking 10 pips. That's all I've been doing for like the last couple of days with the Kiwi. It's not exciting by any stretch of the means, but that's what I've been doing. All right, so again, I'm pointing out that this channel, I'm very much aware that we're in this may be a down channel. You can see it like that. Okay, very much aware. So if we don't break 67 cents, if we don't break the 67 cents, we might just pop right back up again. So just be careful of it. Yeah, resistance 67.65. Okay, it's tightening. It's annoying as all get out, but oops, 67.65. Where'd that 3 come from? I type in the dark, so this is bullish. This is still bullish, believe it or not. I almost put us back in a range yesterday. This is still bearish. And let's go over to the Aussie. All right. Still 72.50, 71.45. Same crap as yesterday. 71.45. Now let's talk. Hold on really quick. And this is range. I'm sorry. I've got to take care of something really fast. Just. Okay, sorry, I had to take care of something real quick. Let's talk about the Aussie really fast. So the Aussie, I don't know what to do with it here. You know, part of me, you know, because as you can see, we're at this 618 and we're just hovering around it. You can see this is how big of a deal. This whole area, right? Okay, you can see how big of a deal it is right here. Here's the thing. Here's the thing about the Aussie. I don't know what to do with it yet, but I will tell you, if we break these lows, it's going to get downright ugly in the Aussie. Okay, I'm really, really confident in that. I just don't know if I want to. You have to imagine, you know, we've sold off aggressively. You know, we've now paused and we're consolidating. That consolidation speaks a lot because what we're not doing is we're not retracing. Okay, now if we retrace, that'd be great. You know, we get a area up here that we can short. But the fact of the matter is we're just consolidating at these lower levels. So if we don't bounce, this next move is going to be ugly. Okay, so I'm just, you know, I'm very tuned into the fact that we aren't going anywhere at the moment, and I'm very much in the opinion that if we break down, it is going to be downright ugly. We are gonna come down and test these, you know, multi-year lows and quite possibly even lower. Right? And one of the scary things about like the Aussie is the Aussie, despite the bid up in risk, despite the bounce in risk, we haven't seen the Aussie go anywhere, which means that if the market sees a little bit of risk off, this could get, like I said, it could get ugly here. So I'm keenly aware of that. All right. let's go over to, oh, that's still bearish, all right? Wait, why is that range? That needs to be bearish. Okay, let's go over to the dollar index. Dollar index. Okay, so here's the dollar index. Yesterday, we talked about this during the Lunch Money webinar. But I'm going to ask you guys, since a lot of you weren't here on the Lunch Money webinar, which I broadcast at noon Eastern, for those of you that don't know. I know so many of you are Europeans and Asians. You know, you guys are already done for the day, so you aren't listening in when I do my second broadcast. But what does this move remind you of? What does this remind you of? That false breakdown on the daily, and it jammed right up your rear end. Remember that? You remember that when you got that jamming up your rear end in the dollar index? Remember that one? Yeah, it's just on a smaller scale now. So on the hourly, we had this range. We popped out of it. Everybody got bearish. Everybody got really bearish to the dollar, and then whoop. All right. The scary thing about that is that we are just like the dollar yen, by the way. We are at channel resistance. Here, let me delete this. If the dollar breaks 95.65, we are going to squeeze the living crap out of the market. As I have explained to you guys many times, and I'll explain it to you guys again, there are not many people on this dollar boat right now. There are not. And there's a lot of people selling the dollar. I saw so many dollar bears yesterday, it wasn't even funny. I made note of that, you know, on the Lunch Money webinar. I said, hey, you know, there's a lot of dollar bears and they're going to get hurt today. And there had been a lot of dollar bears over the last 48 hours that emerged from the woodwork. It was unanimously dollar bearish yesterday on my stream, my Twitter stream. I go, man, where all these dollar bears come from? You know, they're just out of the woodwork. Well, the reason why that's a big deal is because I know many people are not on the dollar boat right now. As the COT data has shown us, you know, there's not a lot of dollar bulls right now. Every week, the dollar bull camp is not getting bigger, but we continue to rally the last couple of weeks. So now you're at the top of a range, and everybody missed out on the dollar, you know, rally. So they're like, okay, well, you know, I missed out on the dollar rally, so I'm going to be a bear now, right? I'm just going to be dollar bearish because we're at the top of the range. Well, not only do you get a lot of people stepping in front of the dollar up here trying to get short, but you don't have a whole lot of long. So if we break out, it's going to be double the whammy on the way up. Do you guys understand that? Do you understand that concept? Right. That's why I think it's a big deal if we break these highs. I don't know if we're going to do it today. Obviously, Janet Yellen could say some crazy crap today and really make it rally, but I don't think that's going to happen. But I'm just saying that if we do, I wouldn't want to be short the dollar if we break out, because not only do we don't have a lot of Nikkei's breaking down a little bit here, just so you know. We don't have a lot of dollar longs, and we have a lot of people that have been leaning short over the last couple of days. So then you're just going to get the double the fun should we break higher. All right, let's go over to the peso. So why the hell is the peso hitting new highs? Man, this peso, same thing here. What? Are you trying to short the peso? Yeah, you've been trying to short the peso because, you know, emerging market currencies are cheap. You know, you had a 618 retracement, 161% extension, right? Yeah, so of course we're going to short the peso because it made sense. Because it did. Over the last couple of days, you know, we had a reversal here, a little follow through, struggled again in resistance, we shorted again. Sure, sounds great. But what now? Isn't that a little bit of a problem that we're not selling off either? Yeah, think about all the people that are just shorting the dollar peso. Because you remember when we were down here, I told you my plan. I said, guys, we were down here. Guys, when we get to 1850, I'm going to short the US dollar Mexican peso hand over fist. So we got up to 1850 and I said, I'm a little scared, but I'm still going to short a little bit. I did. I shorted it again twice. I've actually been on both sides of the dollar peso. I have no exposure right now, but how many people are selling into the strength right now? Well, the one thing that I have to point out is, again, it's like these other dollar pairs, it's not pulling back. And if the market goes risk off, this thing's going to fly. So our numbers stay the same from the last couple of days. Support 1830, resistance 1860, and that's key. We break above that and it's going to get, it's already bullish, but if it breaks above that, it's going to turn mega squeezy. Mega squeezy, nice and cheesy. I sold my US dollar Norwegian krona like a wussy stick. I can't believe I held through all this crap. I owned it. My cost average was like at 833. I sold it this morning at like 830.50. Very small loss, but I just kind of wanted it off my book. But listen, we still have an inverted head and shoulder pattern here. And the way I'm looking at the US dollar Norwegian krona now is now I'm looking for dips back towards this trend line to get long. That's it. Okay, that's what I'm looking for. I don't know if I'm going to get it. I really don't know if I'm going to get it. Any dip about down to 828, probably be a nice long. $8.28 resistance. Fly like an eagle. 833. $833 to $835, really, but I'll write down 833. This thing's been really tight, but if I'm right, and the U.S. dollar, or excuse me, and crude oil has peaked, if I'm right about that, if it's peaked near term, then we are going higher. We're going back towards 840. I'm out of the U.S. dollar Norwegian krona, and I kind of feel that I might have pulled the plug a little early, but again, I was just trying to reduce risk ahead of the weekend. That was my key. Same thing with the U.S. dollar Swedish krona. I sold my U.S. dollar Swedish krona. I owned it like at 831, and I got out this morning at 829 and change. So I just a really small loss. It didn't hurt. But look, same thing here. I mean, same story. We're building these flag patterns. It's like every other dollar pair. These pullbacks have been very minor, guys. And like I said, probably shouldn't have pulled this one off either. 8. We held above 825, which I knew was support, but 8 right now, 827 is support. $827, resistance 835. Okay. I probably shouldn't have taken those off, but I did more of just being a pansy pants. Okay, there's your bias chart. It's done, finished. Okay, guys, go ahead and take a picture, save it, whatever you're gonna do. Okay, I'm gonna take some questions before we have this GDP number come out. Okay, so